Morning, ladies and gentlemen. It's Jackson Hole Day. Top of the morning to you. Got Jackson Hole starting up here in a couple of minutes. Take a look at the markets while it's getting loaded. Twitch.
団子さんがどっか行っちゃった。
In a minute now until the top of the hour. We're looking out for comments from Fed Chair Powell speaking at Jackson Hole.
All right. Good morning. Thank you, and welcome to the first day of sessions for the Federal Reserve Bank of Kansas City Jackson Hole Economic Symposium. My name is Karen Dinan, and I'm going to be your moderator for today's sessions. As you heard last night from Jeff, the topic for the symposium is reassessing the effectiveness and transmission of monetary policy. So it's a super important topic, particularly right now. And we've got some great papers lined up for this morning. We've got 2 papers, and we also have a panel lined up for that. But before we get to any of that,
10 seconds to the top of the
delighted
hour.
to say that we have Federal Reserve Chair Jay Powell here to deliver opening remarks. So
Fed Chair Powell says the time has come for policy to adjust, and they do not seek or welcome further cooling in labour market conditions. They will do everything they can to support the strong labour market as they make further progress towards price stability.
Thank you, Karen.
Policy rate level gives
host from the
ample
Kansas
room
City
to
Fed.
respond to risks,
It's great to be
including
back here
unwelcome
today.
further weakening in the labour market. The timing and pace of rate cuts will depend on data,
worst of the
and his
pandemic-related
confidence
economic
has grown that
distortions
inflation
are
is a
fading.
sustainable path back to
Inflation
2%,
has
again,
declined
that's consistent with
significantly.
what he said previously.
The labor market
Upside
is
risks
no
of
longer
inflation have
overheated,
diminished,
and
downside
conditions
risks
are
of
now
employment have increased, again echoing his prior remarks. Balance of risk to their mandate have changed, and inflation has declined
and the balance of risks to our 2 mandates has changed. Our objective has been to restore price stability while maintaining a strong labor market, avoiding the sharp increases in unemployment that characterized earlier disinflationary episodes when inflation expectations were less well anchored. While the task is not complete, we have made a good deal of progress toward that outcome. Today, I will begin by addressing the current economic situation and the path ahead for monetary policy. I will then turn to a discussion of economic events since the pandemic arrived, exploring why inflation rose to levels not seen in a generation and why it has fallen so much while unemployment has remained low. So let's begin with the current situation and the near-term outlook for policy. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. The FOMC's primary focus has been on bringing down inflation, and appropriately so. Prior to this episode, most Americans alive today had not experienced the pain of high inflation for a sustained period. Inflation brought substantial hardship, especially for those least able to meet the higher costs of essentials, like food, housing, and transportation. High inflation triggered stress and a sense of unfairness that linger today. Our restrictive monetary policy helped restore balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remained well anchored. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. After a pause earlier this year, progress toward our 2% objective has resumed. My confidence has grown that inflation is on a sustainable path back to 2%. Turning to employment, in the years just prior to the pandemic, we saw the significant benefits to society that can come from a long period of strong labor market conditions. Low unemployment, high participation, historically low racial employment gaps, and with inflation low and stable, healthy real wage gains that were increasingly concentrated among those with lower incomes. Today, the labor market has cooled considerably from its formerly overheated state. The unemployment rate began to rise over a year ago and is now at 4.3%, still low by historical standards, but almost a full percentage point above its level in early 2023. Most of that increase has come over the past 6 months. So far, rising unemployment has not been the result of elevated layoffs, as is typically the case in an economic downturn. Rather, the increase mainly reflects a substantial increase in the supply of workers and a slowdown from the previously frantic pace of hiring. Even so, the cooling in labor market conditions is unmistakable. Job gains remain solid, but have slowed this year. Job vacancies have fallen, and the ratio of vacancies to unemployment has returned to its pre-pandemic range. The hiring and quits rates are now below the levels that prevailed in 2018 and 19. Nominal wage gains have moderated, and all told, labor market conditions are now less tight than just before the pandemic in 2019, a year when inflation ran below 2%. It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. We do not seek or welcome further cooling in labor market conditions. Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. So let's now turn to the questions of why inflation rose and why it has fallen so significantly even as unemployment has remained low. There's a growing body of research on these questions, including Gowdy Eggerson's work, which we'll shortly discuss, and this is a good time for this discussion. It is, of course, too soon to make definitive assessments. This period will be analyzed and debated long after we are all gone.
Mobilize breaking out a little bit.
The arrival of the COVID-19 pandemic led quickly to shutdowns in economies around the world. It was a time of radical uncertainty and severe downside risks.
Should be one to watch.
As so often happens in times of crisis, Americans adapted and innovated. Governments responded with extraordinary force, especially in the United States. Congress unanimously passed the CARES Act.
A little bit up in the air with
At the Fed, we used our powers to an unprecedented extent
Typically like to watch
to stabilize the financial system and help stave off an economic depression. After a historically deep but brief recession, in mid-2020, the economy began to grow again. And as the risks of a severe extended downturn receded, and as the economy reopened, we faced the risk of replaying the painfully slow recovery that followed the global
level up
financial
there at
crisis.
5650 would be the call wall. That would be the upside target.
Congress delivered substantial additional fiscal support in late 2020
flow is still bullish.
and again in early 2021. Spending recovered strongly in the first half of 2021.
Daily expected
The
movement was
ongoing
tagged
pandemic
and exceeded
shaped the
today
pattern
already.
of the
We're currently
recovery.
trading outside of it.
Lingering concerns over
Currently
COVID
right at the
weighed
weekly
on
expected move
spending
for S&P
on
500. We've been there
in-person
kind of all week.
services, but
Majority of the week.
pent-up demand, stimulative policies, pandemic changes in work and leisure practices, and the additional savings associated with constrained services spending all contributed to a historic surge in consumer spending on goods. The pandemic also wreaked havoc on supply conditions. 8 million people left the workforce at its onset, and the size of the labor force was still 4 million below its pre-pandemic level in early 2021. The labor force would not return to its pre-pandemic trend until mid-2023.
Morning, FT.
Supply chains were snarled by a combination of lost workers,
Nico?
disrupted international trade linkages, and tectonic shifts in the composition and level of demand. Clearly, this was nothing like the slow recovery after the global financial crisis. Enter inflation. After running below target through 2020, inflation spiked in March and April 2021. The initial burst of inflation was concentrated rather than broad-based, with extremely large price increases for goods in short supply, such as motor vehicles. My colleagues and I judged at the outset that these pandemic-related factors would not be persistent, and thus that the sudden rise in inflation was likely to pass through fairly quickly without the need for a monetary policy response. In short, that the inflation would be transitory. Standard thinking has long been that, as long as inflation expectations remain well anchored, it can be appropriate for central banks to look through a temporary rise in inflation. The good ship transitory was a crowded one, with most mainstream analysts and advanced economy central bankers on board. I think I see some former shipmates out there today. The common expectation was that supply conditions would improve reasonably quickly, that the rapid recovery in demand would run its course, and that demand would rotate back from goods to services, bringing inflation down. For a time, the data were consistent with the transitory hypothesis. Monthly readings for core inflation declined every month from April through September 2021,
Everything holding
although
up
progress
well
came
right now.
slower than expected. The case began to weaken around mid-year, as was reflected in our communications.
Be watching that 56.50.
And beginning in October, the data turned hard against the transitory
You can
hypothesis.
see that that is
Inflation rose and broadened out from goods to services, and it became clear
5600 right
that
here,
high inflation was
5650
not
right here. Those are zero-date
transitory,
levels.
and that it would require a strong response if inflation expectations were to remain well anchored. We recognized that and pivoted beginning in November. Financial conditions began to tighten, and after phasing out our asset purchases, we lifted off in March of 2022. By early 2022, headline inflation exceeded 6% and core was above 5%. New supply shocks appeared. Russia's invasion of Ukraine led to a sharp increase in energy and commodity prices. The improvements in supply conditions and the rotation in demand from goods to services were taking much longer than expected, in part due to further COVID waves in the United States. And COVID continued to disrupt production globally, including through new and extended lockdowns in China. Higher rates of inflation were a global phenomenon, reflecting common experiences: rapid increases in the demand for goods,
Boing.
strained supply chains, tight labor markets, and sharp hikes in commodity prices. The global nature of inflation was unlike any period since the 1970s. Back then, high inflation became entrenched, an outcome we were utterly committed to avoiding. By mid-2022, the labor market was extremely tight, with employment increasing by 6.5 million
Looking at
jobs
Bitcoin futures right here.
from the middle of 2021.
See it's breaking out.
This increase in labor demand was met in part by workers rejoining the labor force as
62,000,
health
up
concerns
3%.
began to fade. But labor supply remained
Breaking out of this little
constrained.
consolidation.
And in the summer of 2022, labor force participation remained well below pre-pandemic levels.
I don't really execute
There were
into
nearly
this.
twice as
I let-
many
I let
job
market
openings as
digest,
unemployed
if
persons
y'all are wondering why.
from March 2022 through the end of the year, signaling a severe labor shortage. And inflation peaked at
Probably talks for
7.1%
about
in June
20
2022.
minutes, 30 minutes maybe.
At this podium
I don't
2
even
years
think
ago,
30 I think 30
I
minutes is
discussed the
excessive, but
possibility
I don't
that
think he takes
addressing
questions,
inflation
but
could
I
bring
can't
some
remember.
pain in the form of higher unemployment and slower growth. Some argued that getting inflation under control would require a recession and a lengthy period of high unemployment. And I expressed our unconditional commitment to fully restoring price stability and to keeping at it until the job is done. The FOMC did not flinch from carrying out our responsibilities, and our actions forcefully demonstrated our commitment to restoring price stability. We raised our policy rate by 425 basis points in 2022 and another 100 basis points in 2023, and we've held our policy rate at its current restrictive level since July 2023. The summer of 2022 proved to be the peak of inflation. The 4.5 percentage point decline in inflation from its peak 2 years ago has occurred in a context of low unemployment, a welcome and historically unusual result. So, how did inflation fall without a sharp rise in unemployment above its estimated natural rate. Pandemic-related distortions to supply and demand, as well as severe shocks to energy and commodity markets, were important drivers of high inflation, and their reversal has been a key part of the story of its decline. The unwinding of these factors took much longer than expected, but
Coming up to that
ultimately played a
56.50
large
level.
role in the
Still not
subsequent
that far from it.
disinflation.
Just consolidating here.
Our restrictive monetary policy
If you're trying to
contributed
short
a
into this, by the
moderation in
way,
aggregate demand, which combined
like,
with improvements in aggregate supply to
just let
reduce
the market do
inflationary
its thing,
pressures,
right? If you're trying to like
while
fight
allowing
the
growth
tape,
to continue
I would
at
highly
a healthy
recommend
pace.
probably just refraining from
As labor
doing
demand
that. Like,
also
yeah, you can get lucky and
moderated,
it can
the
reverse,
historically
but
high level of
if
vacancies
you're going to do
relative
it, at least
unemployment
look for like
has
extent, like
normalized
more
primarily
extended
through a
levels that
decline
are
in vacancies,
being targeted,
without
right?
sizable
Like
and disruptive
56.50.
layoffs, bringing the labor market to a state where it is
But
no
other
longer
than
a
that,
source
I'm
of
just sitting here
inflationary
watching,
pressures.
waiting, seeing how things digest
A word on the critical importance of
as he
inflation expectations.
talks more and more.
Standard economic models have long reflected the view that inflation will return to its objective when product and labor markets are balanced without the need for economic slack, so long as inflation
What's up, Tony?
expectations are anchored at our objective. That's what the
Path of
model
least
said.
resistance is currently up. That is definitely
But
true.
the
FD.
stability of longer-run inflation expectations
will I play
since
to
the
the upside or
2000s
downside?
had not been tested
I
by
personally
a
would be
persistent
looking at the
burst of high
upside,
inflation.
but
It was far from assured that the inflation anchor would hold.
Mm-hmm.
Concerns
we're-
over
the
de-anchoring
upside target for me is
contributed
right about
to the view that
56.50,
disinflation would
okay?
require
And I'm not
slack
going
in
to
the
execute
economy, and specifically
into
in the labor
this
market.
move, right? I got to look to
An
see how it
important takeaway
digests.
from recent
before I
experience
even
is
wanna
that anchored
commit to
inflation
anything like that.
expectations, reinforced by vigorous central bank actions, can
Like,
facilitate disinflation.
I bet I
without the
could
need
probably
for
put on
slack.
just a little something, and then maybe play
This
the
narrative
56.50.
attributes much of the increase in
But you never
inflation
know.
to an
The moment he
extraordinary
walks off
collision
stage,
between overheated and temporarily distorted
Market can be like,
demand and constrained supply.
spaz
While
out.
researchers differ in
Just
their
rather just
approaches
chill.
and to some extent in their conclusions, a consensus seems to be emerging, which I see as attributing most of the rise in inflation to this collision. All told, the healing from pandemic distortions, our efforts to moderate aggregate demand, and the anchoring of expectations
By the way,
have worked
this is
together to
NQ
put
I'm looking
inflation
at.
on what
This is ES.
increasingly
this is
appears to
actually
be a
SPX.
sustainable path to our
Sorry.
2% objective.
SP 500.
Disinflation while preserving labor market strength is only possible with anchored inflation expectations, which reflect the public's confidence that the central
He's
bank
talking too
will
long
bring
right now.
about 2% inflation over time. That confidence has been built over decades and reinforced by our actions. That is my assessment of events. Your mileage may differ. So let me wrap up by emphasizing that the
mileage
pandemic
may
economy has proved to be unlike any other, and that there remains much to be learned from this extraordinary period.
Got Karen over
Our
there in the
statement
corner.
on longer-run goals and monetary policy strategy emphasizes our commitment to reviewing our principles and making appropriate adjustments through a thorough public review every 5 years.
I've never been to the Midwest.
As we begin this process later this year,
that where-
we will be open to criticism
Is that where
and
he's
new
at? Is that
ideas
considered the Midwest?
while preserving the strengths of our
Or no?
framework.
Am I completely wrong?
The limits of our knowledge, so clearly evident
I've
during
never
the
been in the
pandemic,
middle of the United States
demand
before.
humility and a
Other than
questioning
maybe a
spirit
plane
focused
railway.
on learning lessons from the
I always
past
hear it's so beautiful.
and applying them flexibly to our
Missing
current
out.
challenges. Thank you.
That deserved a huge round of applause right there. All right, let's get into the charts. Let's see what's going to be taking place here. Holy moly. Okay, that was it. Now let's see how the market digests. Right, okay, so he's off the stage. The market liked what he initially said, but now you got to let the market kind of digest what's going on here. Right now, we're just trading at the anchored volume weighted average price from the start of the speech. Okay, it's coming in slightly here. And these are some large range candles. This is NQ on the 30-second time frame. We're talking huge candles. So if you are stepping into this, just be careful here, right? You got to let the market kind of do its thing. As far as the zero date levels that I was trying to explain while he was talking was we have 5650 above us, 5600 below us. That's kind of that range for the trading session so far. Okay. We did, as I was kind of highlighting, if you caught it, we tagged the upper weekly, upper daily expected move, and those are big. The daily expected moves were quite large, actually. Obviously, right? Implied volatility swells up while we go into these type of events. Market's coming off slightly here. No surprise here. This is what I mean by, you can get lucky on a complete reverse, but just be cautious and careful because because watch what happens. We can just keep on snapping back and forth, okay? Some people like trading that. I personally, I'm not much of a
of the
fan.
upside seen in wake of the initial remarks. In terms of Fed pricing, very little changed. Around 33 basis points of cuts priced for that September meeting. Remember, analysts were generally of the view that that September 6th, August report on the labour market will be the influential factor in tilting that pricing towards 25 basis points or pricing in more chance of that larger 50 basis point move. Through to the end of the year, money markets are pricing around 101 basis points worth of cuts versus around 97 before the release of Powell's text. So it's fully
Hey,
pricing
Solomon.
in.
Hey, thanks for that the,
25
super,
basis point cuts
super chat the other day,
present.
Solomon. I'm going to be getting that beer.
By
I
the
took
end
a
of this
screenshot
year.
of it because I'm going to post my beer with that super chat. Thank you for that. I was going to go grab a drink the other day, but my brother wasn't feeling well, so we couldn't go. Okay. Now the thing about these events, they bring all kinds of hysteria, right? Like people get all worked up about these events. They want to trade it. They want to trade before it even happens and catch a huge move. I'm going to tell you my thought process here because I might not be the guy that you want to watch if you like that kind of stuff. I just let the market digest and do its thing. I'm well aware of where we currently stand on some of these key levels. I'll watch market net flow and see how things set up. Right now, there's a little bit of a magnet over here at 562 on SPY. So that's right back to the upper weekly expected move. Right now, after the announcement, we're just kind of trading inside of the prior candle on that 15-minute time frame. It's in bullish context. We are above a rising 5-day moving average. We are in positive gamma territory. The gamma flip line is at 55.60. Okay, we kind of almost went negative the other day. Some actually services probably was in negative gamma because they do source their data differently. But for the stuff that I look at, we are in positive gamma territory still, where dealers look to buy the dip, sell the rip. Okay, and now I'm just kind of just waiting, watching, and we could pull up individual names. If you drop them in the chat, we can look at individual names and see what's going on there. But the market's currently trading in its happy place right now. And it's outside currently of the daily expected move. And these expected moves for today were actually really large. We had Qs that had almost a $6 expected move. SPY had almost a $5 expected move. Sometimes that's a weekly expected move. So this was, we moved a lot in a single day. We're up about 1%, 92 basis points in this current moment. All right, let's take a look at some of these other important assets. We'll take a look at the dollar. The dollar's getting clobbed back, right? So we saw a little bit of a bounce. It's below last year's closing price. So we're down on the year in the dollar. And this fall in the dollar, I would imagine, is helping out things like gold, right? We have gold is probably bid. Silver looks bid. Just floating around all-time highs. Silver consolidating right around here at about 1.63% up on the day. Let's take a look at some bonds. We'll just take a look at TLT for now. You can pull up ZN or ZB too. I just used to pulling up what I trade. TLT, it's up about 67 basis points. Still holding pretty defensive posture up here. We have Qs, they're up 1.25%. That's just an inside trading day. IWM showing more relative strength, is up 2%. Okay, and as far as the 11 sectors, well, actually, before we go to the 11 sectors, we'll look at SMH. This has seen a little bit of a bounce. There was something interesting that I wanted to call out for a lot of the semiconductor names, like SMCI. SMCI is getting pretty tight here. This is something that we called out on the just the trade ideas tab if you're in the Discord. But if we're looking for like a break of that 630, maybe a little bit higher. Yesterday we had this inside day, so we had a double inside day, right? So we had this kind of large range, tighter, and that's what we were basically calling out. That's not necessarily bullish or bearish. What this means is price is getting so coiled up right here, and you can see this if you look at the volume. The volume was drying up too. So to see an explosive day in semiconductors, very likely to see that in the near future. And just yesterday, we did see somewhat of some explosive moves, but SMCI kind of held itself together for the most part. And we're just trading again now inside another day. And this could be because we do have NVIDIA earnings around the corner, so things are kind of just paused. But if we do break to the upside on something like this, you might be able to catch, a quick little move to the upside, maybe even up to 700. I mean, maybe even more, but I'm just, looking at risk to reward, right? So if this is the risk, what could be the reward? So if we buy the breakout and you play it up, say up to here, I mean, that's a pretty good risk to reward. If you just risk this much to reward this much, right? Something to watch. Could break down to AEHR was one that we shared too, and AEHR, it could set back up right now. It looks like it might be, but we had this volume weighted average price getting pretty tight here from the month to date and the swing low. We had the inside trading days, and then it broke to the downside. So you have to really just, for one, we didn't break out, right? So we didn't break out, so you don't really enter. If you did enter, you'd want to get out if it starts breaking, right? To protect yourself if there was more downside. And then if it resets back up and breaks back out to the upside, hey, there you go. You can reset in. One of the examples I used was IMAX, because this was one on the trade ideas too, but it was on a trade idea on this specific day, how we were getting tight, and basically said if it breaks the high of this candle, you can go long. If it breaks the low, watch out. So it didn't break out, so you wouldn't have entered, but if you did, for an early entry, you would have just got out and then wait to see if it resets up. And the next day, we had an inside trading day, setting back up. This day would have been the entry, and you would have had a stop right here, and you would have just update the stop and see if trade goes in your favor at that point. So it's taking stabs at something, and I don't know, what kind of gain is this? I don't know, from 20 bucks to 21.30, right? So $1.30 per share, pretty good move, but we had a powerful earnings, it consolidated, and it's set up. The other ones that I'm sharing right here, they're the trend right now is kind of down and it's just consolidating. So I play that with how you will. All right, so SPY, still setting up here. Still watching for that 56.50 level. This is what I mean. If you shorted it, you have to be quick, right? This is 1 minute. And then it snaps right back into your face over a couple of minutes. Okay. Okay, there's some names coming into the chat. We'll pull those up, okay? Let me get my chats up, both of them. DIA is at highs. VIX still falling. What's up, Tony? Okay, I'm gonna write down some of these names. Give me 1 second. Sorry about that. Okay. Where was I? Oh yeah, I'm gonna write down some of these names. Got a lot of names coming into the chat. Put your names in. Get your names in. Put your names in. Put the tickers in the chat. We'll pull them up. Here we go. Okay, we got Nike. We got PayPal. We got SoFi. We got Tesla. Mara. And CLSK. Snow. GDXJ. The Gold Miners Junior. Palantir. Let's get Palantir. Let's get MU. Invertia. Tree. Is that something? Sounds like something. VKTX. VKTX, that sounds familiar. Riven. Get the names. All right, we're pushing highs here in NQ. Going for that breaky. We're going for that 5650, ladies and gentlemen. Boing, wing, 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 wing. 5650, still got some points up there. A little room to go. See if anything's changing here. Yep, it grew, as you can see. Is there anything outside, potentially growing further than that? Yeah, maybe actually. 5,700. So the people are reaching out further. People are reaching. Trading outside of the daily and weekly expected move. Market net flow is bullish. So if you're trying to fight this, as I stated, careful. You don't want to get chewed up by this market flow. Typically want to trade with market flow. I know it's getting extended, so if you don't feel comfortable, sometimes the best trade is just to sit on your hands and let things go. But we're coming up to that 5650. Not too far from it. Not too far. Okay. I'm interested just pulling back up to Mobileye because that was one that, I would have. So Mobileye, and it still might be early. For a little trade. It moves with the market, so the market comes back in. But a 15-minute time frame. Let me move some of these indicators. I don't need all these things. I don't even need the RSI. But it did break out of this kind of horizontal resistance here. Could be one to have a little bit on for a potential move higher. Let me see here. And I'll pull up some of these names, all right? One second. All right. Yeah, looking good, man. Holy moly. I'm gonna have to probably trim a little bit of my portfolio today. I'm just keeping an eye on some of my names too. So yeah, so this is MBLY. One of the things that I was watching for was a potential breakout of this level, and it's starting to move from that right now. Pretty clean. It's a 5-day moving average right here is this purple line. The RSI is in overbought condition, but overbought can stay overbought. Typically what I like to look is for divergences, which is not there yet. And we're seeing a little bit of a pop higher here, but horrible trend on the downside, right? horrible trend, but for maybe a shorter term move, you have the SPY trading outside of some of these key levels. And I think that that's what we just need to be aware of as we're kind of near and around that 5650. Doesn't mean we can't blast through that, but things are kind of extended. So you got to at least be on your toes, right? Be on your A game for managing a risk. Okay. Where did there's Twitch, okay. Yo, that was loud. It was right in my ear. Higher time frame for team. Yeah, we can do that. I'll probably just pull up the daily on most of these, to be honest. Okay. All right. Coming back into the anchored volume weighted average price there for NQ. S&P 500 is pulling in a little bit here. Oop, disconnected. Reconnect. Okay, let's pull up some of these individual names while the market's kind of doing its thing. We'll take a look at Nike. Yeah. So Nike, I don't know, if you've already entered into Nike or whatnot. I was waiting for this gray box, but I built the case also that, after this bad earnings move, just kind of how obliterated it actually was, kind of overdone. And it just, to me, Nike, this was kind of like one of those things that I look at. I'm like, I don't know if I'd be trading this, but if I'm looking to hold and buy this, I think it's over $100 name, and it'll probably go higher than that over the course of years, maybe sooner than that. But it did wedge out, right? And we did break out. We saw this inside trading day here, and we're seeing some follow through. So now it's kind of just digesting its current run. And remember, this kind of went up with the market. So if the market is going to consolidate, maybe this might take a little bit of a breath after this break. And you can go and you can kind of go from there to see how it sets up. But I mean, if you're looking at this for longer term, this is probably over $100 name, right? The trend though, it might take a while to get there because the trend is down, right? You have the 50-day sloping, you have the 200-day sloping. It's been in a massive downtrend. So a lot of the times you'll get a lot of fake outs, shakeouts, moves, and it'll wear you out over time. But sometimes it sets up nicely. Like for example, it did right here, this wedge pattern. It's set up for a good risk to reward to the upside. Now, I don't necessarily like the risk to reward for an entry in this current moment. So you have to look at it in terms of a different style of trade, right? If I'm looking at this in the eyes of a swing trader, I feel like there's better setups for me to enter into right now. Or maybe if this sets up and like kind of wedges out again, or whatever the case may be, goes sideways, then maybe I would like it a little bit more. But right here, it's like, okay, well, we just had, an outside day on more volume than the prior day. So this could mark a potential period of consolidation or a pullback. You had to kind of like squeeze higher. So I would need to see, I need to see a little bit more of a consolidation for something for Nike to execute into for the shorter time frame, right? For swing trading, because I don't want to get my capital locked up in something that might, go sideways for a while or consolidate. But if you're like investing in it, then, I mean, it's just a different mindset, a different way to approach things, right? Let's go to PayPal. So I still have a position in PayPal. I played a breakout of PayPal, and it was, and then I exited a little bit. So I'm going to be trading around a core position in PayPal, hoping that we go into a stage 2 markup. So I'll be looking to add into PayPal when I see digestion and consolidations, right? Because PayPal has just been a really choppy, crazy, back and forth for a while. If you go to the weekly time frame, you can see it went into a stage from 3, which is distribution, stage 4 decline, and now we're starting to kind of flatten out here from a weekly basis, and the 40-week, 30-week is starting to turn back up here. And that's a positive sign as we're losing data and we start accumulating new data for the 200-day moving average. These are going to start averaging themselves up. And that right there can be establishing a longer-term change in trend. Potentially, right? That would be the idea behind going along this stuff. So even if it goes up higher, I would be looking for it to build its next base. And its next base, I will be going long if it sets up
are constructive.
Nicely for like a core position. So I entered in long, right, on breakout. I took off a little bit, right? A lot of markets are just extended here. And now I'm just watching it consolidate. And if it keeps going up higher, I have a little bit on, but then it's going to consolidate. It's going to build a base if it wants to do actually a stage 2 markup, right? Stage 1 is accumulation, stage 2 is markup. And during the markup phase, you have a lot more little cycles within that, right? So I would be looking for the little bases that build out in PayPal. But executing into it in this current moment, SoFi, also, it's kind of just butting its head right there to the 200-day moving average. Definitely still pointing down, but we are getting a little bit of, flag strength here. I feel like if we were to pop up higher, it would still probably come in, and you'd have to see it trade for a while for this to start flattening out, and the 20-day to start obviously cranking back up, and the 50-day to start cranking back up too. So if you're playing this short term, maybe you can look into the 15-minute time frame, right? And then see how the 5-day moving average is holding up, and price got really tight here.
SHELLN reports increased
So
flaring maybe observed
maybe a stop down
for the
here
next
if you're
few
playing it,
days
and
as
then seeing if you can
maintenance
get some
activities
continuation
occur
to the
at
upside.
manufacturing
That would
centre
make
in
sense to me.
Pune.
You know, if it can hold this low, which is, you know, 720, so maybe a stop would be at like 717, 719. These are wide, that's pretty, I mean, it's 2.5%, it's not that bad. But, or 3%, maybe even more, you know, 4%. It's just a small move to be 4%, so the position sizing is incredibly important in names like this that are, you know, high beta. You don't need to put a lot of money at risk in these type of names, because they move, you know, 2 times the S&P 500, sometimes, you know, even more than that. Let's take a quick look at the S&P 500. S&P 500 is still consolidating, is pulling in a little bit. We're literally just chopping around, dancing around that anchor volume weighted average price of Fed. Not really set up here yet. Let's see market net flow. Still bullish, still holding strong here. The convergence is waning. Market net flow, sorry, the 0-date levels. See if anything's setting up. 5650. Still there. So yeah, this is just a pullback right now. And we're just doodling in and around the weekly expected move. It's an inside candle. So we had this 15-minute candle, this 15-minute candle. Now we have a little bit tighter of a 15-minute candle. So it's consolidating, also known as just digesting, outside of the daily and currently at the weekly. Not my favorite look to trade. Could be one of those days where I don't trade. Don't trade the S&P 500, that is. Still got some other names on. Okay, so we did SoFi. Let's go Tesla. Take a look at the Tesla. Oh, in order to look at Tesla, though, we have to actually go into a Tesla, right? We've got some other names coming in there, too. Okay. So, Tesla bulls. Okay. Tesla just has an inside trading day today. I will note that Tesla, that was a pretty bearish looking day yesterday on some pretty decent volume, but we are just trading inside of that current day. So I'd want to see price actually reclaim these upper levels over here, 225, I'd say, to feel a little bit more confident. But what we do notice is as price is trading up in these ranges, we have an inclining 50-day moving average. The 20-day is starting to kind of curl back around here. The 200 is still declining, but the more we trade, you know, it'll flatten out more and start to turn up slowly. And we did break from this trend. When we got the market volatility in August, Tesla went with the market. And we've recovered. But Tesla hasn't really quite recovered as well as some other names. Not horribly. So August 1st was here. Can we maybe retest that August 1st high, which we haven't seen yet? So, but overall, yeah, I think it's consolidating a recent trend break and it's holding up in these averages. So really, I'd just be careful underneath this candle and then more bullish above it as it's trading inside. If we look at the 15-minute time frame, we're just. I would want to see this consolidated. It was just basically 15, 15, 15, 15, you know, an hour straight up. And now we're right back at the 5-day moving average at the volume shelf profile, you know, 221. Let's see where it consolidates. See smaller structure, even a minute time frame. I mean, it's coming in here slightly. Let's see this volume. So that's what I see over there. Just resting there. All right, let's take a look at some of these crypto stuff. CLSK. CLSK, I was bullish back towards just above 15 to look for a pop back up into this range. I didn't trade it, but that's what happened. And then we cracked through 15. And I don't really like the look of this chart at all. I'll tell you why. It's because we cracked through this 15 key level. We saw a flush. And now price is just like, and we had a bearish earnings move, right? For the most part. And now price is just getting pretty tight here. And if I were to flip this chart and invert it, I'd be like looking for a bullish breakout, which in this case would be bearish. So, you know, if you are bullish, I'd be looking back. I'd be looking for it to break above, you know, this area, this 1275-ish. Such a high beta name, you know, but I'd be careful here if this trend breaks, because like I said, if this was an inverted chart, I'd be looking for a bullish breakout, 100%. And I'm not going to short it, because these things can move 15, 20, 30% a dang second. And I'm not interested in that going against me. Okay. So CLSK, Mara, see if Mara looks any better. Just not really a trend here in Mara either. I mean, yeah, can it push up higher back into kind of where a lot of this volume was traded, back into and around this 20, kind of this middle of this, you know, this channel? Sure. But then what's it going to do? Exactly what this happened, what this happened, what this happened. I mean, if you've been bullish miners like Mara, it's down on the year. It's been chopping around sideways. Maybe if you go to the weekly time frame, it's building out a better base, but yeah, I mean, extended move to the downside, we're seeing a bounce back. It's just the setups here are just not my favorite. I like the volatility, but I like it when the volatility contracts and gets tight and actually sets up. But this is a wild name. I mean, it's just all over the place.
Just to make you aware, the White House's Kirby just mentioning Iran in recent comments. He says US continues to monitor Iran, is not taking anything for granted. Believe Iran is still prepared to do something if they choose to.
The thing about these cryptos too, it's like if you get in the trade and you have a really good up day or 2 days, they've been faded. So it's like you're like a 1 day up, like this move right here was up 18%. Like if I'm up 18% in a single day on one of my positions, I'm peeling profits off, right? So if you are trading these names, you can go smaller time frames, but if you're swing trading them, you don't need a lot of money in these names to have good winning positions. The 5-day moving average is sloping up. We did see kind of like a little consolidation here into the 5-day moving average. And now we're just digesting. So above an inclining 5-day moving average, it's above this little 1720 still. Could set up again for another run. Sure. Right now we're kind of just chopping here in the smaller time frame. I'd be, you know, cautious and careful right here if it's trying to get a little toppy. A little distribution here on the 1 minute. See how that sets up. All right, Snow. Yeah, what's up with Snow? Snow's been a little butthead. Snow's been a little butthead. Snow is melting. Okay. Yeah, Snow. I'm not interested either. If it sets up, if we consolidate, maybe I'll look for something, but. Right, so we had a bearish earnings move here. People were like, I'm gonna buy into that, right? Because, oh, it's, you know, that's, you know, long-term value. Okay, but it didn't even digest. It just kept going down. Then it started to tighten up over here, and we saw a little pop, and then it got faded immediately. Even here, this was probably the better setup of them all, right around this area, because you started to see a higher low, and then price consolidate. But then it was what? Into earnings. So it's like, okay, now you have to wait, because if you execute into earnings, you don't know what's going to happen. It's binary. So we gapped up. Everyone's probably like, here we go. And then it reversed on itself. And then follow through to the downside. Okay? So this it's quite literally been all over the place. So if you go long, okay, maybe you're playing it for back up to a gap fill. Maybe, and I mean, even if it did this, Okay. It's going to take time, right? So yeah, you can catch little moves to the upside, but the trend right now is currently down. You'd think here, you know, in an earnings coming up soon, though, the market's going to like what it sees, regardless of what the numbers are. Maybe the rate of change of, you know, bad earnings changes. Maybe they have been. I don't know. I haven't looked into them. So if you go to the 15-minute time frame, we're below that 5-day moving average. Wait to see how it consolidates, right? The 1-minute time frame, we're below. We're kind of just in the 1-minute opening range. I'm going to apply that opening range right now, actually. Yeah, this is the opening range, just 1 minute. Just trading in and around that first opening minute. I'm actually interested now. So where's SPY at now? Oh, there goes SPY. There goes some moves in SPY. Let's take a look here. What's going on? So contraction leads to expansion. We're coming into, what was this anchored volume weighted average price? I think that was just the swing low for the day. I could remove that. All right, so SPY's coming in. Let's take a look at if anything structurally is changing. 5,600, 5,650 are still the main key levels. Market net flow, still bullish. Still bullish. Seeing some decent orders coming in on 0 date though. Bullish convergence, bullish divergence, so we're just pulling in. We came down to 5,600. That was a full reversal up to 5,600. So 5,600 could be a level to watch for here for a little bit of reprieve.
Around 10 minutes now to the top of the hour, and at the top of the hour we'll get the text from the Bank of England Governor Bailey. Text is due at the top of the hour. He will actually be making his remarks at Jackson Hole a bit later in the session. Just in terms of recent commentary from BOE Governor Bailey, speaking at the Q&A at the meeting where they cut rates last time out, when asked if the cut was a one-off, he said he will not give any view on the future path of rates. And speaking in interviews after that Bank of England rate decision, Bailey also cautioned against the prospect of successive rate cuts as well. Just in terms of pricing for the BOE's trajectory for that September meeting, money markets currently discounting around about 8 basis points worth of cuts there. They are more certain with regards to November, where around about 24 basis points of cuts are priced, and through to the end of this year, money markets are discounting around about 45 basis points of rate cuts.
Yeah, I'll pull up gold here in a moment. All right, so SPY is legit just trading right there at its opening range for the first minute. Getting a lot of volume, though, to the downside. So this is the market doing its thing, digesting. Once again, nothing that I want to execute into right now. There's not a really clean setup here. It's just chop, man. And remember, we're seeing volatility to the downside. The market's still up, people. Market's still up 45 basis points. Oops. Market's up 45 basis points. Below 5,600. NQ coming off hard. Still trading at that 5,600 marker. See if anything's structurally changing here. It just doesn't look like it. It just tells me that this move can get just completely just once again. Okay, we're starting to lose a little convergence here. No surprise. But a bounce back, like just a snap your face, like if you were to manage shorting, just you know, on these type of names, if you're intraday trading. You can peel profits, update stops, and so forth as we're moving into these key kind of exposure levels.
And just for those following the situation on the Canadian railroads, Teamsters Union announced strike notice to CN Rail.
Background music is just something on Spotify. It's like Stream Beats by Harris Heller. Makes stuff for streamers. All right. Just checking in on my portfolio a little bit here. I want to make sure everything's all good. Highest to lowest. Worst performing name in my portfolio today is ALNY, down about 1%. That was one that I took profits off of already. Let's pull that up actually. This is for a swing trade. I played this just a little tight breakout over here. Took a little bit of profits off. Just consolidating here. Coming in a little bit. Still nothing really structurally broken. Still in bullish context. Small position. That's actually my smallest position in my portfolio. My biggest gainer today is COMP. This is a smaller price stock. This is up about 5% on the trading session. Kind of broke out of this little flag here. I actually looked at this one from the weekly perspective. How it's kind of breaking out of this longer term potential base. And the 40 week and the 30 week and the 10 week is starting to turn up. So it's a small position, but potentially for trading around a core position. So it's doing okay right now. The second best position I have on right now is Google. Why is it showing? Why is mine up so much more than this? That doesn't even make sense. What is going on right now? Maybe, let me refresh this. Oh,
And folks, just want to point out that the ES futures
I'm
now
not trading
slumping
Google,
below the levels
GOOGL. I'm
that
trading
we saw
GOOX.
before the Powell
But today it's
speech
showing, why
began.
is it
So
showing
currently
that it's
trading
up
about
to- that doesn't make any sense. What is going on right
56.25. We were around a little bit higher than this before Powell gave those
Whatever.
remarks.
It is what it is.
Bonds, meanwhile, have clung on to the majority of those gains thus far. Again, just going back to that Fed trajectory pricing in money markets, for that September meeting, very little change, 33, 34 basis points of cuts priced. For the end of the year, it has got a little bit more dovish, 103 basis points now priced versus around about 97 prior to Powell's comments.
GOOX is what I traded, just so I can have a little bit less capital. But I did exit a little bit here on this day. So that's another performer today. And then my real estate trade is doing pretty good. This is CUBE. This is one that we put in trade ideas a while ago. This one's breaking out. It actually might be time to peel a little bit or update the stops and so forth. But this one was setting up pretty nicely. It was kind of like it broke out and consolidated right here, and then I was just looking for basically a move through this level and to come into potentially this zone. So this one's breaking out. Looks pretty nice. Hey, thanks for the super chat. You didn't need to do that. I appreciate that. Thank you. Yeah, I can take a look at SPY, and we still got some more names on deck here that people want to see. I just wanted to check into my portfolio and just make sure that the world's not melting. I'm doing fine today. It's fine. Everything's pretty low key. I have 3 names that are down. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 names that are up. I have a lot of positions on right now, more than I feel comfortable with. But during this kind of run, I just wanted to throw my feelers out, a bunch of starter positions, basically, to see what might actually work, you know, in a pullback and or consolidation. So I looked for good setups. I went over a lot of those on one of these, you know, market briefs that I shared in the, it wasn't on YouTube. I shared it for the free members of Patreon and the paid members, where I went over like 13 names. Yeah, so quickly, S&P 500, see this 5,600? This is what I mean. Like, we came down into it and people probably thought, okay, it's over, it's game over. It's not game over,
London
because
Copper Mine
market
has
net
resumed
flow is
talks
still
in a
pretty
bid to end the strikes
bullish.
in Chile.
Yeah, we lost convergence, but it's still bullish there. And then nothing was changing from a zero-day structure, right? 5,600, 5,650. Like, it wasn't like people are reaching way down lower yet, at least. And what's happening? Well, we're ripping right back up. What does that mean? It means it's chop, people. Choppy, choppy, chop sue. Chop suey. Chop suey. Okay. This is why if you're shorting, you got to be careful. That's why you look to potentially take a little profits, whatever the case may be. I mean, it depends your time frame. It really does. I'm just talking more intraday right now, but chop suey. Yeah, we can add F to the list. Ford. All right, let's keep on looking at some of these names. I just wanted to make sure everything was all good there with some of my names. GDXJ, the Gold Miners Juniors. They're still holding up rather well. I took a fade, re-added into a fade position, but I'm already out of it. At least I think I am. Let me double check. Yeah, I exited the other day. Yes, I'm out. So yeah, miners are still holding up rather well. I'm not a fan of really trading miners. I mean, you do get some nice consolidations and some nice breakouts, but miners are a tricky thing.
So around a minute now to the top of the hour, we will be on the lookout
They're
for remarks from
volatile.
BOE Governor Bailey.
They can change in a second. But overall, if I'm looking at this, if I'm looking at stuff like the bigger ones, like Newmont, like that's pretty strong. It's new highs for the year again. Be looking for consolidations there. I think was it AEM? Yeah, Aneco Eagle Mines, that hit a high today. All right, and then obviously gold is, right at these all-time highs too. So gold miners, like I like gold miners. It's a lot of the times though, you have silver that just has a strong correlation, right, to these miners. And silver's up on the day today, so we're seeing some strength in miners. But you'll notice that when silver comes off, I mean, GDX looks very similar. There's a strong correlation, and that's what bugs me a little bit, is because silver's been putting in lower highs.
So we'll keep an eye out for any
could be consolidating here. This could be a consolidation for a longer breakout, sure. And then miners are going to probably just rip. But these have been putting in lower highs, and the miners, GDX, GDXJ, so here's GDX. GDX is putting in new highs. And that to me,
so it does on a first glance
is a
just
little
appear
off,
somewhat
because if
academic.
silver
Just
comes
noting the
off,
COVID pandemic
there's
and
probably
the
a
war
high
in Ukraine
probability that
caused
the
a surge
miners
in
have some
inflation.
downside
These
catch-up
events
to make.
and the nature of policymakers' responses
So
have laid
in the
bare
miner
challenges
sector,
and trade-offs.
good-looking charts, divergences though with the silver thing. So if you think that silver is going to go higher and be bullish, I think the miners are a good trade. But I want to see silver prove itself, and it just hasn't yet. So if you do take individual trades, just make sure the setup is nice, good consolidations, and you play for the breakout. And if it doesn't work, you just get out and let the trade set up, right? And the dollar is getting cracked today.
Just in terms of other commentary from Bailey, he says market events like those 2 weeks ago will happen. The test is not whether they happen, but whether they trigger wider instability.
To see the dollar, this is,
and as we mentioned, just a cursory glance at this speech so far, and it doesn't appear to be too much by way of interest for monetary policy and the economic outlook. We'll, of course, go through this speech a bit more closely, but at first glance, it doesn't appear like anything too interesting in Bailey's remarks.
Yeah, that's a news thing. Just in case if something comes up, we'll have the news kind of tell us. I'm trialing out a news service right now. So
and Fed's Harker on 25 or 50 says it doesn't matter so much, but he reiterates he commits to the process.
Commits to the process. Committing to the process. All right, so dollar is really coming off hard. Yeah. Crude oil is still bouncing. Crude oil is still in this really tight compression pattern. It's just getting tighter and tighter. Higher lows, lower highs. You would think that a breakout, though, if oil really took off, man, I feel like
Microsoft and CrowdStrike. Microsoft is
right back to the days where everyone's worried about higher inflation.
To discuss changes after the CrowdStrike outages.
Kind of feels like that anyway, despite seeing what we're seeing, inflation come off. All right, so Qs, we're just trading inside. It's really, honestly, not much of a nothing burger. It's IWM that has the relative strength here, up 2.73%.
Governor, it's too early to declare victory on inflation. Second round inflation effects appear to be smaller than we expected, though.
Still not like, I can't trade this. Let's take a look back into Mobileye, see if anything's happening there. Mobileye came off, not surprised. I came off with the market. Still holding above the 5-day moving average though. So we'll see how this one sets up. A lot of these names, that's why I like to make sure that they don't correlate perfectly, because if I'm unsure about the S&P 500 and it comes off, a lot of the names that I trade will probably follow suit.
Harker doesn't see large outside risks of a
ZM's showing
downturn
some
in the
really
jobs
nice strength
market.
today. ZM would be one to watch for sure, because this can still, like, it's up 3.69% on the day. We broke out, consolidated. Maybe this might set up where you can play it into 71.
Once
That'd be
again,
$1.50 from where we currently are.
He reiterates
Or, sorry,
that we look at the totality of
50
data.
cent higher from where we currently are. Yeah, Zoom holding up rather well, and we're seeing some decent volume on the moves. Yeah, let's see this come in a little bit and reset back up. That'd be actually kind of nice for a little bit of a continuation. It's pretty extended on like 15-minute time frame. It's coming into this value line up here, 70.50. And then obviously we're seeing a lot of strength here from the daily. We closed at the high and we're following through. Didn't Kathy Woods like sell out of this like before earnings, or what was that? As soon as she got out of it, it flies up
More from
higher.
BOE's Bailey. Policy setting will
funny.
need to remain restrictive for sufficiently long. And that's just reiterating their guidance.
Huge spike on the put to call ratio. Do you have a live version of a put to call ratio?
Bailey says the course will
Mine
be
always
a
updates
steady
end of
one.
day. Chris is asking about if I'm kind of concerned about the strength of gold. Yeah, I think gold's shooting warning signs. There's something going on there. Gold is typically more of a flight to safety. So gold is telling a story, and I think it's telling a story that we're gonna know in hindsight. I think we can understand that, yeah, something's going on with the price of gold. And we'll probably be like, oh yeah, it was so obvious. It was clear in sight. You know, if something happens, that's what will happen. We'll go back and be like, it was so obvious. So because of that, it's not like I'm like, oh, okay, I see it. Now I'm ready to trade something specifically because we're noticing that. But I think it is something that we have to just be aware of. And we could trade with the trend of that because it can go on. It could keep going. And then when we get our narrative, we'll go back and be like, it was so obvious, right? That's why gold was going up higher and higher. It was because of the Fed bankers kept on purchasing it, and now they released it, or it was this country that was suppressed, or there's all kinds of things that come out after the fact, and like, okay, now it makes sense, and then they'll talk about it, right? They'll have 1,000 Twitter spaces about it. But as it stands in the current moment, it's like, okay, it's trading higher. Trade with the trend, and that's about it. A lot of different names set up too, like AAU, I think it was, right? So yeah, AAU, right? It was breaking out. This is one way to trade gold. Goldman Sachs Physical Gold ETF, GLD, right? GLD is another ETF. These are all at highs. I'm not really too interested in trading gold. Gold's a little too slow for me. If it like sets up, okay, cool, and I'll put on a position, but it has to be a decent setup. I'm not gonna just execute into this. There's other names that I like that I'll trade. I just look at this as a piece of inventory. If it's a longer term hold, that's a different story. I'm thinking more swing trading basis. Biotech's still holding up rather well here. So XBI, we did a nice breakout of this contraction, and then we get market volatility, right? And now we're coming back up to this 103. Sorry, I'm looking for this name that I posted. Oh yeah, TGTX. I was looking at this. Yeah, cool. So TGTX, you gotta understand that these things are probably, I don't know if this has super high short interest or not, but I would imagine it does. But we saw this massive breakout on good volume over here of this, longer, pretty darn deep base. But now it's flagging out, consolidating right here. So I'm kind of watching to see how this reacts and responds, because if we go back through 25, maybe it sets up for a push to 27, 28. on TGTX, and it gives us like a good risk to reward on that move. It's not quite there yet, but it's trading inside. It's consolidating its recent breakout. That's positive. Volume is drying up. That's also another sign that we're just digesting. And as we're digesting, price isn't like coming off hard. It's really just going sideways here. So this one would be on the radar to watch for sure. You can see 5-day moving average is catching up to it here, trading around where the main volume is, just basically through 25. Could be one of those to watch if you're into that biotech space. Yeah, there you go, Chris. Yeah, you have a core position in gold and you're trading around it. There's, yeah, that is the way typically to go about, like, longer term positions, right? You have a core position, and if you see the setup, you can add to it. You can take partial profits at certain areas and update stocks and go from there. Okay. Let's go to PLTR. Oh, TJT, no, VKTX was on there. Okay, so GDXJ, we talked about. PLTR is next on the list. PLTR, yeah, super strong. It'd be on the radar. I'd be looking for the consolidations, right? This one's a very choppy name, right? You get these huge moves up, right? And then earnings got faded. You get a huge move down on earnings, then it rips right back up. So you need a little bit of a stomach for PLTR. So when it sets up really nicely on a swing trade, awesome. It's not quite there in my opinion yet. So this would be more of like, hey, do you think this is long-term potential for as an investor? That would be what I'd be looking at. Otherwise, other than that, if I do see price start to consolidate, build a base, do its thing, and set back up, I'd be looking at that for these 20-day, 50-day, 200-day to catch up. You know, look for pullbacks, find the strength, play into it to try to see if we get a continuation. Because remember, strong stocks typically get stronger. Do you really honestly, so we're 1 day separated from the high. There's a high probability that we go retest 33.13 or go through that in the future, right? There's a high probability of that. So I prefer to see it consolidate a little bit more for that, but by Monday, right, we can be like boink and just take that high out again. So you can go to the 5-day moving average. It's starting to flatten out here a little bit, consolidate here a little bit. So yeah, if you're trying to hold in longer term, I would look for a little bit cleaner of a setup. But overall, it's a strong stock, and strong stocks typically get stronger. Micron for me is I wouldn't touch Micron yet. We did have an outside trading candle right here. It was on pretty strong volume, and we're crossing below that today. So we're getting a little continuation to the downside. I'd rather prefer to just see how this sets up. The long-term trend of this, the 200-day, it is still sloping up, so that's nice. So, you know, if it sets back up, yeah, maybe we come back into like, see how it trades around the 50-day, and, you know, eventually if the 50-day starts flattening out and coming like so, but I think it'll take time to kind of heal. Other than that, you know, this could be a bearish outside day, and we come to maybe take 50% of this little bump, see how it sets up from there, or it comes down and retest these lows, right? So I don't like executing into something that looks quite like this. It's a little all over the place for me. Yeah, it's just a little all over the place for me right now. NVIDIA is basically the market, right? Earnings is around the corner, so that's what everyone's going to be on pins and needles. I would imagine it's going to be bullish. I mean, what's the reason why it wouldn't be? So we'll see how the market, I mean, bullish, like good earnings, I would imagine that's going to be the case. Who knows what guidance is going to be or anything like that, and how the market's going to perceive it. I don't execute into a new position into earnings, but NVIDIA is strong. That's all there is to it. It's been strong, it has been strong, and strong stocks, they get stronger, and it has been. And remember, trends don't just go down without a fight. There is a fight when you start to see trends change. Especially when you go into like the distribution stage 3, right? So you have stage 2 into stage 3. You typically get this boom, over huge shot, and it comes back up, and it comes back in, and then it goes crazy, and then eventually it breaks down. It's known as distribution, or the Wyckoff distribution pattern, right? How there's like many phases. So Yeah, I'd be more cautious than anything. We had an outside trading day here, but once again, earnings is around the corner. And if I look out to the trade tab and we go out to 7 days, that's when earnings is going to be, not 7 days, but if I go out to the weekly expiration, you'll see we have 109% implied vol. $15.75 expected move. So from where we currently stand, I mean, that's new highs. It's all-time highs. If it's one standard deviation and we go hit that, or from where we currently are, it's like halfway down from this current run up. And who knows what happens after that point on a bearish earnings gap, you know? So if you've been in this stock and for the long haul, I mean, yeah, you can take partial profits or whatever, but if you've been in this stock for a longer time, there's nothing that screams anything bad right now, technically speaking. But I can see the argument for like froth, right? But who knows, dude? You can see this thing go like boom. I know it's hard to believe that, but I mean, we've seen that happen. I mean, it's been happening. It happened right over here. So we'll see what earnings brings. Great trading vehicle, though. It's all over the place today, this morning, but it is kind of breaking through this. So this kind of felt like a little capitulation fake out candle, so we might even come right back to these highs. Look at NVIDIA move the market. Like there you go, right? We're right back into the opening range. We're still below the anchor volume weighted average price for Jerome Powell. So if we come back into this, let's see how price responds. But we're within the first 30-second opening range right now of the cash market session. That's how much we moved today. None. It's just you can get dismantled if you're too aggressive in these conditions. Right? Well, look where we pinged at, 5,600, right? Just below 5,600, right around 5,600. How did we know to put zero DTE 5,600 right here? Because early in the morning, we talked about how traders were focusing there and 5,650. 5,650 grew more throughout the day. It was 5,600 was the main level earlier on. Market net flow has still been bullish divergence, no convergence. And what are we doing here? We're right back at the weekly expected move. Yeah, unfortunately, I just haven't seen the setup that I would prefer to trade. At least like an A setup. I've seen some C setups. Like this would probably be a C setup, little trade there, but let's go back to Mobileye, see if Mobileye is recovering at all, see if I can execute there at all. Nah, still just floating around. Okay, let's continue on. Let's look at some more of these names. We had NVIDIA that we just talked about. We'll
just making you aware of an update here for Meta via the information. Meta does Axe planned high-end Quest headset.
Lending Tree.
Keeping the device's price below $1,000.
That's why it sounded familiar.
Was proving challenging, and the decision does follow a meeting with CEO Zuckerberg and other executives.
Okay, so Tree looks good. This is a high beta name too, but Tree looks good. I mean, we're just seeing a series of higher lows, higher highs, and we're kind of coming right into this area, right? We had a little bit of a shakeout here, and it's setting back up. Yeah, looks like it's kind of just getting hung up right at about 56. Yeah, good find. Good find. What's the volume like typically? It's a lower volume name, right? Which is fine, but just be aware of that. It's just, you know, lower volume, less liquidity. You can get a little bit more violent moves on if all of a sudden big volume picks up. Like to see it, you know, pull in a little bit here, maybe set up on a smaller time frame and then execute through 56 and see if it pops through there. But overall, it's holding up. It's holding up fine. VKTX. I think somebody had asked about this one earlier. It sounds familiar. I think I used to look at this one. So VKTX, Viking Therapeutics. I mean, there's been a lot of nice setups on this name, but they keep getting faded. So when I'm looking at this now, I see a nice big volume bar here. Volume is drying up nicely as price is holding up rather well. So I zoom in. We're above the 50-day. It's turning up above the 20-day, rising 200-day. Yeah, this to me looks pretty good. So an early entry, maybe above the high of today's trading session for a pop-up to this swing high, 70, maybe more. As you can see, we kind of ran into supply right here, which is roughly at $70. So we're kind of getting hung up at 70. Pulled in, consolidated nicely, good volume, prices drying up, volume's drying up. If it breaks down from here, I'll just be a little cautious, see how it sets back up for another potential setup. But I do like the look of it for the shorter term there. It's a very interesting type of name because when it goes, it's very quick. It just kind of takes off. And that's bios for you. A lot of these biotech type names do that. If we start breaking down, you can see that this 10-day volume shelf here, that's where most of the volume is, but then there's more down here. So you can see when we broke through this little area, notice how we kind of just cut through butter. There was nothing really above there, so we just flew through. All right, so if we can get through 65, maybe we fly through that again, and we try to press higher. But if we cut down through it, just be aware there's no legs, there's no footing here, right? So you can kind of just get sloshed around. But yeah, it's good looking little shorter term setup there. Rivian. Rivian's a little sloppy right now, but I can see how a little bit more consolidation and work through could be something good. But you have a 30-week sloping down, 200 or 40-week sloping down. We're below the 10-week, so price now needs to really recover. We're seeing a nice little pop right here, on this little trend. Yeah, and you could call this it's a very tight wedge pattern. And it could be setting up to make a move back up into and around these range. And if it does do that, I mean, we're talking, well, that's a huge move, $14 to $18. It's a big move on a percentage basis. But the more we trade up in this range, we'll start to lose some of this prior data for the 200-day calculation. So I'll go back 200 bars, right? 200 bars is right here. So as time proceeds, we'll start to lose this data. And that would actually be fine, but this data right here is averaging the formula up, right? So that's part of it. Now, when we start moving through it, if this is going to be above the 200-day moving average, that's good because it's going to start formulating this data and then the next data. So that means that it could continue to pull down if we're still below it. But the more that we average up through this, it's going to flatten out to turn back up. And I think that that's something that I'd be more interested in over time and to see how it sets up. So if you want early entry, if you think that this company is to do great over the course of years, cool. But me personally, I'd like to see these start to turn back up, like the PayPal chart that I was sharing, how it was starting to make the turn. Doesn't mean it's going to work out, but that's what I would like to see, is the average start to move itself higher. But you can see here, all these averages right now are converging very tightly. You can say it had a golden cross, the golden crossover. But now you just want, if it's going to be the golden cross, you'd want to see it actually hold, right? And this start flattening out like that. Boom. because I'd much rather play this risk here up through than where it's currently at. But if you do enter, you can also have a stop right down here under through that 13. Up 7% on the day. Nice move. Okay, let's take a look at these chats. I want to make sure everything's all good here. Take a look at ARM. I'm going to write down ARM. Naya is at new highs. Naya is crazy. There's something actually interesting going on with the New York Stock Exchange that I can touch on as far as like a McClellan oscillator divergence. I want to see if that's actually still there. It's not going to be updated right now, but I'll show yesterday's. Need that stomach, yeah, for PLTR for sure. I did talk about snow, Pawan. I can pull back snow up though. ASTS. I'm just writing a couple more of these down as we're kind of moving. I'm gonna write snow back down in there. Oh, Roku is actually something that I was interested in. I forgot about. I wanted to pull that back up. Cake. Yeah, Cake was one we pulled the other day. Hood. Neo. Okay. So we got our continued list. I did PM, NVIDIA, Tree, VKTX, Rivian. Okay, so we got Team up next. I'm gonna go Team really quick, and then we're gonna look at the markets just to check in. And from that point, I'm gonna take a quick break, and I'll be back. I do have to be to a rehearsal dinner today, so. And then I'm gonna be gone Friday and Saturday for a wedding. There's Coco barking away. So Team, yeah, bearish earnings move, boom. We're seeing a little bit of a follow through up. It's kind of moving with the market and consolidating here. But once again, it's in a bearish trend. So I'm not really interested from the shorter term swing perspective at the moment. If I look smaller and I'm like saying, it might be just for a day or two, you can say it's above a rising 5-day moving average, or we're consolidating right around these areas. See how it works itself out and play for, a couple bucks higher. All for that, but I typically set most of my stuff up from the daily perspective. So if I'm looking at this from a daily perspective, I know that it's in a bad trend. So if I do take a trade that's in a bad trend, but I see a consolidation or I see things tightening up, which is exactly what's happening, right? And if I want to play it, it's a little bit more aggressive as far as the time frame, right? So I'll play it, and I'm typically taking profits pretty quick, like quicker than usual, or updating my stop loss faster as well. So if this does want to continue this run, boom, maybe we come up to this gap fill that can potentially act as a level of overhead resistance, and that trade would be good, right? Because you'd be looking at like, okay, my risk is going to be here, and maybe I'll play it even up to the 50 days, like a 1-for-1, but up higher to the gap fill would be 2 to 3 for 1 for the risk. Now I would prefer that setup with no overhead supply, but knowing that it's a, maybe not an A-class setup, maybe it is for some people that like that setup, but for me, knowing that it might be like, okay, well, I can just use a smaller size position, right? I'll grade the setup and I'll be like, okay, this is a C setup, B setup, whatever, and I'll just trade a third size position, and I'll leave it on there, and I don't really need to worry about it at all. And if it goes up, cool, I capture some of those gains. All right, let's take a look at the S&P 500, see if anything's changing here. S&P 500 back up. Here we go, back through the weekly expected move. That's what we're talking about. You can see that we doodle around the anchored volume weighted average price, still doing that for Jerome Powell. Okay, and we're outside of the opening range, just doodling, doodlies. And 5,600 held, and we're below 5,650. Market net flow, still bullish divergence, losing convergence. We lost convergence. It may turn green. If it turns green, I think we're going for the 5,650. I think we're going there. That's where I'd be watching for. Right now, we're just pinning between those two levels. Okay, that's chop between two levels right now, and market net flow is currently not giving us the edge that we love, which is fine. But overall, what are we doing? We're just dancing around its happy place. The risk for the week. The risk for the week. That upper weekly expected move. It's like magic. If we start breaking from these levels, but you have to substantially break from these levels for all of a sudden we get some massive dynamic hedging, and you'll notice it on the 1 minute time frame. You can go to the 1 minute time frame, go to the SPY or ES. We'll go to ES. Okay. Go to the 1 minute time frame. If we start breaking from this weekly expected move significantly, you'll see volume go, it'll probably fire off to 8,000, 10,000, 9,000 contracts in the middle of the day, or whenever we break those levels. And you'll notice that like, oh, okay, something bigger is taking place right here. That's why I like this little 1 minute time frame. Sometimes I just like to look at the volume and kind of how it's working. Volume's actually pretty decent here. I mean, 6,000 contracts, not right now, but we're seeing little pockets of decent volume. But okay, so yeah, that's SPY. We're just doodling in and around the daily and weekly expected move. NQ is still right there, getting held up at that Jerome Powell weighted average price. Maybe we can anchor a volume weighted average price to the swing low of the day, and we can keep an eye on that for as a potential. And we kind of undercut it. We did a little U-turn through it right there. All right, I'll come back and I will look at some of these other names here in a moment. I'm gonna go ahead and take a quick pause. I'm gonna keep this open and I'm gonna keep this open. Quick break. I need a little refresh on the water. How do you use Anchor VWAP on Webull? I don't know if Webull has Anchor Volume Weighted Average Price. I think it has a VWAP, but I don't know if it has the Anchored Volume Weighted Average Price. It's been a while since I used that platform. Got the London close on tap. Yes. Thank you, FT. Coco's the biggest bear. We'll take a look at ARM and all that stuff when we're back. Okay, I'm gonna take a quick break. Take a quick break.
just a quick look at US equity futures. E-mini S&P and Nasdaq just bouncing off some of the sell-off we just saw in the recent hour or so, while the Russell 2000 is outperforming significantly. Not really seeing much selling off in the Russell 2000, with the future up 3.4%, or that is 72 points.
What did I miss? Nothing. I didn't miss anything. Still floating around that volume weighted average price. Okay. Take a look, y'all. Now I can look, yeah. All right, let's see here. The cumulative net premium line for the puts have been kind of upticking here. Still bullish divergence, but it's been picking up. But we do have, maybe we might see convergence go to green again here. I'm looking at ES, and ES is getting pretty tight. Pretty tight over here. Still like a chop bucket though. Like I'm looking at SPY right now. Yeah, there goes the green. So we're starting to see green now. Not much clarity here. 56.50 still that reach. And we're just right at the weekly expected move. Yeah, I don't. Just not a huge fan of the setup. Just not a huge fan of it. Your PNF does show PA convergence. Oh, yeah. Are you saying the green convergence? Yeah, mine shows it. Is that what you're talking about? Well, it's kind of in and out right now, but... Okay, I want to look at some of these other names while we're kind of just floating in and around here. We had F for Ford. Ford seeing some strength today, up 2.7%. A little extended here on the 15-minute time frame. Not a place where I'd execute into, but we are seeing that daily strength, and then daily time frame, it's just all over the place for me. So it would have to be a setup on a shorter term basis. Other than that, if you're like a longer term holder, then maybe you can figure it out from there. But this is just sideways to me. There's no like we have like most of the volume traded around 12.50 right here. We get a little extended from it. We came back in. We got overextended from it. We're coming back in. So Ford is just a massive chop bucket. Not my favorite look. I wanted to go back to Zoom because that was kind of looking interesting here. It's still sideways, so nothing. Okay, ARM. Well, that was a kind of a strong move there intraday. Another one on the daily time frame that just kind of all over the place, but I do see kind of being above, you know, a longer term 200-day moving average. We are kind of consolidating here. The 20-day is starting to kind of, you know, take a corner here. So if we can hold within this, it might set back up for, you know, a test of that 50-day. Once again, it's not like an A setup for me when I look at this after a strong move down and we're bouncing. But there's still like a lot of overhead supply here. So it's one of those things when I look at it, you got to just be agile. So maybe the smaller time frames, 15-day, you know, we saw a nice move. We're consolidating that. Maybe it's a breakout where we continue up to the 140, 145, and then you have a nice little trade on your hand. It's hard for me to initiate trades into these weekly expected moves or going into the weekend. Kind of want to see what Monday brings. I haven't added anything on into my portfolio today, and I'm not taking it. I haven't taken any trades yet. All right, convergence is green here. There's the SPY. It's seen that move up. Let me go back to it. There you go. There's that little kind of like tight breakout here. So if we do continue that, I would still be eyeing in on that 5650. We can hold convergence here. I'd be eyeing that 5650 still. That'd be the target for the day. And you see how we broke through this anchor volume weighted average price? Saw some strong, like a strong little move right there through that. So you want to hold it now. You want to hold that. Go. This would be the, one of the better chances that we have of, as far as like a setup goes, if it can hold these levels. So pullback would be actually quite nice there. Watch, zoom in. See if we pull back and see strength from the pullback. No strength from the pullback yet. See if we can get there. Okay, let's see here. Last one, pump on. Yeah, it's still, it's like once again, we're seeing some things start to line up. Like this 5650 is still the main area. Starting to see convergence. That's positive. I mean, it's setting up for a move. It's not necessarily bearish, so I would imagine we can press it. But then you look at the weekly expected move, and we're just doodling here. So the market has to commit to breaking through this. That's why I don't really like the setup here. But I can see the case for it, right? I can see the case for it. Is it good enough for me to set into? Nah, no. I don't care if I miss it. My portfolio is doing good today. While if the market goes up higher, I have a portfolio that's gonna benefit from it. If the market comes down, I mean, so be it. Then my portfolio will probably get hit. Okay, let's go back to NQ. I want to see here. Yeah, so we didn't really see the strength from here yet. Just nice little fake out. Not a fan of fake outs. DPST. Okay, we'll pull up DPST. All right, there's some other names that I wanted to go through while the market's really just honestly chopping back and forth. So we'll go to, we did ARM. Let's go ASTS was one that somebody had mentioned. Oof, man, that's just wild intraday moves here. The daily time frame, geez, I must have watched this back here. So this is, okay, I don't remember when I talked about this, but notice here how we saw this move up, boom, even if you missed it, it was okay. It's still consolidated again. I was looking over here at like the third base. After it already moved up, we broke out, we back tested, and this thing exploded. So never underestimate how far things can move. So whenever I was looking at this, it was back at $12 and it went up to 40. All right, so right now, yeah, it's a little exaggerated, right? And these candles are gigantic. So the volatility is definitely there. I'd be just watching the consolidation, see if it sets back up again, where we get the higher lows, price action gets tight, offers a good risk to reward. Right now, it's like, whoa, be ready to, maybe come back up and then come back down and then come back up and then come back down. Things got to tighten up here for me, but overall, it is holding up rather well. Strong, right? Just getting a little choppy up in here. Or it can basically, dismantle any trader. Yeah, so snow was mentioned again. Again on snow, just a bad trend overall. I would be waiting for the bases to form up a little bit. But yeah, under a declining 200-day, well below it. Below a 50-day, it's declining below a 20. You can play for bounces, but me personally, like if you would have just tried to buy the dip, strong or weak stocks just got weaker. Series of lower highs, lower lows. So I'm just not interested here. The only way I'd be interested for shorter term would be like looking at the 15-minute time frame, looking at potential divergences, and playing like little breaks for like small moves, right? Boom, maybe up to 126, which is actually a pretty big move, actually. You know, maybe not that high, maybe 122 to 124, this kind of like range up in here. And then with a stop, right? But that'd be the only way that I'd be looking at that right now. But a swing trade, I wouldn't be interested. If you know about the company's long-term potential, maybe it could be potential investment where you buy it and you're like, oh, the next 10, 20 years, I know it's going to be higher or whatever. Let's go Roku. Yeah, Roku seeing some strength today too, 12%. It's actually breaking out of this little base here after a strong move. So I'd like to see if consolidate here. Regain that 200-day moving average. But it's good to see strength, and it's seeing some strong volume. So it's likely to get some sort of continuation on strong volume on a breakout like that. But I would just, I don't like entering, you know, at the highs of the trading session. I would much prefer for the consolidation. But yeah, this would, after a move after today, you know, 12.5%, strong volume on this kind of like base, kind of like reclaiming this base, definitely would be one to have on the radar for potential continuation to the upside. Whether that be shorter term, which would be more in my, I would say more 15-minute time frame. Daily time frame, you'd want a few days of sideways price action and see if we can get the continuation break. Cake. I mean, Cake's not too far from its highs from a year-to-date perspective either. Once again, it's like, do you execute into this? I personally, after it came from down here to here really quickly, I would just prefer some sideways consolidation, kind of like this, but we didn't break out, and then it broke down, came back. So this level right here, this 41 and some change, 41.20, I'd like to see price consolidate, the 50 days start to kind of turn back up, and so forth. And then try to play the breakout on some volume. So that would be Cake. Hood. Also just all over the place for me. One could argue actually just right here, this little tight consolidation was nice, a little breakout right there. But you're going up against a declining 50 days. So I'd much rather have this thing come up here and then sideways chop around to play a longer term breakout. But right now, I just don't like how all over the place this stuff is. It's just too crazy for me. NEO has earnings around the corner. It's also a big downtrend. I bet you there's some sort of positive divergence here on RSI. So if you're looking for like bottom picking, you know, if it can hold this low, yeah, you can get some bounces. But also just, once again, if you play bounces, if you play these like, you know, beat up stocks and you're playing bounces, for example, like Mobileye, right? Mobileye. Right? Yeah, there's probably a positive divergence here. I'm pretty sure there is, but it's in a horrible trend, right? So it's going to get, chances of it getting faded are probably pretty high. Like today, it broke through this level. Mind you, it was kind of on the news that it's moving with the market here. Little fake out, boom, pulled in. It's kind of moving with what the market's doing. So we can see if it resets back up. But I would look for setups like this, but just understand that the trend on these names are pretty darn bad. So you have to be a little bit more aggressive. Dust. No, that wasn't. Oh, DPST. Whoa, yeah, this thing's wild. Yeah, good move on good volume, and it's breaking out of this little tight contraction. So, you know, we see the weakness here, things tightened up. So these are like the better trades in my opinion. You get this tighter price action, and then you play the breakout. Right, and this was above the 50-day that was rising. You can see it consolidated into that. It was above a 200-day. Oh, but if you look back to the left of the screen, it's a little crazy. So yeah, personally on these names, once again, I'd be looking for the consolidation. But if you manage to play this little tight breakout, you'd have a stop down here, and you'd see if you can get some continuation even on pullbacks. It might take place where you can follow through, or even come up back up to this 120 area and reset back up, kind of like so, and then revisit it. But if you enter here, you just be willing to get a little bit upside, then downside, and then to eventually see some sort of a consolidation. This is regional banks bull 3TF. So this one, like these type of things on 3X funds, they're for trading purposes, in my opinion. They're trading vehicles. So if we just go to like the KRE, this is why like IWM is doing so good today. KRE had this nice contraction. We broke out, and now we're seeing some follow through today. So you'd have to be bullish on regional banks to really think that we're going to get some continued moves, in this, right? And if you look at IWM, what do you think's driving the move? It's regional banks. IWM has a lot of regional banks. Definitely a risk-on type day today. You have semiconductors leading the way, consumer staples towards the bottom, XLV at the bottom. XLU is up on the day, still at the bottom. Actually made a new high for the year today. Did XLV too? XLV made a new high for the year. Consumer staples made a new high the other day. Semiconductors well off the high. Real estate made a new high today. XLY well off the highs. XBI not too far off the highs. Materials not too far off the highs. Energy down. Down from the highs. XLI industrial sector made a new high today for the year. Financials new high for the year. Communications made a new high yesterday. So to be quite honest, I mean, you're seeing today it's a risk-on day, right, where you're seeing strength in the other sectors. But you have even so, you have utilities, healthcare, consumer staples, right? All this stuff is making highs for the year. Which if you understand that, it's like you would think that if everything's all right, these would come off a little bit more, or they would be consolidating. There'd be a rotation into these other names, and it's actually not really what we're seeing right here. That's why it's a little bit confusing. And then you look at like gold, right? And gold's like at another high for the year, basically. It's a very strange market, just very strange here. Definitely the warning signs still stand. I put a video together with like 7 warning signs, and we talked about all of them, and they're still there. But also to keep note, look at we almost just hit a new low there for the year. Well, we did hit a new low for the year. Last year's low, I think, was lower than that, though. Let me go back a little bit more. That'd be a new low for a year, but not last year. Go 2 years. It was a little bit lower than that. Yeah, it was lower, 99. And this is interesting too, because if the dollar gets oversold too much, the correlation it has with other markets, and the dollar starts bouncing from these levels, I think that'd be that puts pressure right back onto the markets. But right now, it's dollar coming off is really helping things out. 10-year yield coming off, helping things too, I guess. I swing trade mainly, but I do day trade. I've been day trading some. Today, I'm not really day trading. I'm like, look at this market. It's all over the place. It looked like a good setup breaking through here. Was it like an A setup? No. Was it a B setup? Probably not even that. It's just chop right here, so I'm just not interested in this. I'll let you know if I'm interested, if it's a decent setup. Right now, it's a market that's all over the place. I'm not. Look at this. I'd rather just sit on my hands. This is NQ structure for the day. It's just by its opening range. The first 30 seconds, it's been chopping back and forth. Here's the 30-minute time frame for S&P 500, all over the place. Green, red, trading between the key levels that we marked out earlier in the morning, 5,600 and 5,650. This is just market digesting what just happened. That's all this is. Market net flow, bullish convergence. Market zero date levels on S&P 500. Still 5,650 and 5,600 are the main levels. So it's not like everything's set up. It's not bearish. It's not not bullish. It's more leaning bullish than anything, but we're just chopping. And if I can't get a clear read, I'm just not interested. And while this is happening, one of the giveaways there was we were at the weekly expected move, which is like why I'm like, I was kind of thinking, I'm like, well, we'd really have to start breaking from that. And we're kind of in the happy place for the markets. So it makes sense to do this chop suey. Oh, what's up, Savage? I don't think that we're tanking. I think we're just chopping. I mean, we're up 82 basis points on the day. You know what I'm saying? So if you're thinking that we're tanking, I think that you're probably just on a very, very smaller time frame, right? Obviously. But really, if you look at the daily, we're just right here. It's like, we're like just inside, right? And it's just all over the place. This is our day-to-day. But we're still above the opening range in SPY, right? That can change. But like, good luck trying to like really figure this out. Is what it is. It's all over the place. All right, what else are we looking at? Crude is flying still. Is crude flying still? Let's take a look. Yeah, crude's moving. Crude. Crude's coming right back up into that 200-day. Slightly declining. Why is crude going up? Honestly, it's probably just because it's sold off hard. Now it's bouncing back. You know what I do find interesting here, though? If crude oil is going to start moving up and bouncing, I'd be watching that 10-year yield for the same thing, because they do correlate pretty closely, and sometimes oil kind of leads that move, which we've shown in prior charts, right? If I bring that up, I'll show you it again. Let me see if I can bring it up. Yeah, real estate is cranking right now. Real estate is the leading sector right now, up 1.68%. Well, KRE is another sector, but as far as the S&P 500 goes, the 11 sectors. So, as the market's coming in a little bit here, this is crude oil, right? The black line is crude oil. The green and red candles is the 10-year yield. And the reason why I'm saying this is because sometimes oil, right, it starts falling, and then the 10-year yield there shortly after follows. Oh, oil starts bouncing, the 10-year yield followed there shortly thereafter. So my thought here is if oil is going to start, recovering here, is the 10-year yield going to start to move up too? And if the 10-year yield bounces, and it bounces with the dollar, right? It bounces from an oversold conditions with the dollar, rising yield, rising dollar. That typically, in the past, I mean, correlations, they come and they go and they change, but that has put pressure on markets. There's been times where I look at this market view, and the only thing is up is the dollar and the 10-year yield, and everything else has been in the red. In fact, I'm kind of interested now that I'm going to go month to date. So, I mean, take a look here. So here's the 10-year yield. Like, yeah, these are cryptos above this, but 10-year yield is month to date performing the worst, right? 7.23% to the downside, which means energy is the worst sector, which makes sense, right? Why does that make sense? Because we just pointed out how oil kind of moves with the 10-year yield. And energy is highly correlated to oil, energy stocks. And then you have the dollar right under that. And then right under that, you have USO, which is oil, energy. Okay? So those are down on the month, and everything here is pretty much up on the month. If I go year to date, look at, you have the 10-year yield is down year to date. The dollar is down year to date. This right here is just the Japanese yen, no surprise there. Then you have Bitcoin, right? Because Bitcoin's been kind of all over the place. TLT is down on the year, but pretty much flat. So once again, if you go even look year to date, you have the yields that are down, the dollar's down, and everything else is up here on the green. So the reason why I'm pointing this out is because, yeah, the correlations, they come and they go, but if the dollar and the 10-year yield do want to start to find some strength, I think that that's what put pressure back on these markets from just an intermarket standpoint. I know it's probably hard to see this, but I'm just trying to call it out and point it out as I'm seeing it. SPY is coming back in here. Looking for that 5,600. It's coming down pretty rough, pretty aggressively. See if anything's changing once again. Oops. Market net flow still bullish, losing convergence here slightly. See if anything from a 0 date changed. 5,600 is growing. No surprise, we're kind of heading in that direction. Still nothing, man. It's just not a clear trade setup. Let it happen. TYVM. What's up with TYVM? Oh, thank you very much. Eco, I started looking up as a signal, TYVM. That means, I'm assuming that means thank you very much. Kava is beast mode. Kava did earnings. Look at Kava. Yeah, Kava would be on watch here. If we close up in this range, I would be looking for follow through. I'd be looking for consolidation. Kava's been just an absolute monster. Absolute monster. Ah, gotcha. That makes sense, Giancarlo. DPST. Did we already pull that up? I think we did. Okay. Yeah, I guess let's watch to see how 5,600 comes into contact. That would be the level to watch on the downside here. It's last time we came through it a little bit and then bounced. It looks like it wants to come re-go to those levels. Definitely okay with not trading this crud. Okay, give me a second here. I have to go to this thing today a little bit later. Rehearsal dinner and then a wedding on Saturday, and then I brought our car in to go to the service at the dealership, and like I just needed an oil change, and I knew that there was some stuff that needed to work on, but I was not expecting what they came back with. They came back after inspection with $12,700 worth of work that needs to get done. They say that there's like a leak on the turbo, like some bushings or something like that are cracking, and all this stuff. It was like $12,000 worth of work. I'm like, holy moly. At that point, it's like, and then I was like, well, what would a trade-in value be for this Range Rover? right? For a Range Rover, they said that they'll give me $1,000 for the trade-in. And he was like, you can probably get maybe $1,000 more if you sell it third party. And I was like, bro, you are full of it. $1,000. Yeah, they're capping. That was crazy. I'm like, are you like, I'm not that dumb. I can sell the seat inside of it probably for $400. You know what I'm saying? Like, on eBay. Leave the keys and walk away. It's it's a Land Rover. Toyota's been offering you $10 oil changes to look at all the other stuff. Dude, that's hilarious. I get it. That's funny. Yeah, I know, huh, Jalen? $1,000. I'm like, wow. And he said it with like a straight face. I like was trying to hold in my laugh. I'm like, you might be able to get $1,000 or more from it if you sell it third party. Just like looked at him and was like, I feel like I can sell this seat on eBay for $300 or $400. It doesn't make any sense. Savage, what settings do I have on? These are just default settings here. And then I'm using convergence. You can do momentum too. But I just use convergence. All convergence just lets you know if the price of SPY is moving with market net flow. That's all that is. I just have it on there. I don't know. I really just watch this and then I look at the absolute price. That's pretty much all I do. All right, so we did come down into and around that 5,600 level. We tagged it. Whoa. What was that? There's that 5,600 tag. And let's see here if anything's changing. Now, there's not much reaching below it, and there's not much reaching above 5,650. So it literally just screams chop. Here's another bounce opportunity, basically. It just, that's all I'm seeing. Choppy wadas. CarMax will give me a cash quote. Yeah, I can go through CarMax and ask them. Oh yeah, that's all right. The wheels and tires are probably worth more. Seriously though, it's pretty funny. Sell it to Carvana? I guess I can call and try to find out. And I know people might be thinking it's the end over here for SPY, but really we're just chopping within the 1 minute candle here. Not the greatest looking setups, but I mean, they bounced it here. They're trying to probably bounce it again at that 5,600 level on right here. You can see they're kind of moving from that level. I probably would have maybe tried to take a stab here, but I just, yeah. Hammer candle on the 5 minute. Yeah, that's what's forming. That's kind of what it did here last time, right? We bounced from the level and we formed this, somewhat of a hammer candle. Had some follow through. Once again, like this is just consolidating, chopping. You have a high, a lower high, a low, currently a higher low. I wish there was more going on today, but it's Friday, going into the weekend. Chop suey. What'll really crack this market down is if you take a look over here to Nvidia, and if Nvidia starts pulling back in, boink, back into its opening range. I think that'll put some pressure back into the market, but even that, Nvidia is still holding up above its opening range. Low, higher low. Sorry, a high, a lower high, a low, higher low, and currently we're kind of right there. It's just choppy, consolidating. I'd like to see more pivots. right? So when I pull up the 1 minute, I like to see at least a little bit, some more pivots and some sort of setup. And this to me is just, I just don't, it's not clean. It's not clean for me. Yeah, ZM's just been strong for sure. ZM's been a nice one. Probably coming into that 71 plus level. Like we're right there cracking to a new high. I'm gonna see that flip over now. There you go. For the day. Yeah, maybe you get some like 20 cents, 30 cents up more. It would be nice if it actually consolidated here. Technology, by the way, on the daily time frame looked pretty rough yesterday. Look at this candle. Big ol' outside candle on higher volume than the prior day. Yeah, kind of rough looking. These can mark reversals. That's what we saw here. We saw an outside trading candle with volume higher than the prior day. I mean, even here was an outside trading day. Higher volume than the prior day, and we're kind of getting that too. So really, tech stocks, like, you need to invalidate this bearish candle by getting above that high, and you can confirm it by potentially closing underneath the low. Right now, we're just inside trading. And then you look at XLK right here. It's right at that opening range, kind of flagging out. And if this starts breaking, that is, yeah, NVIDIA. The only thing here is market net. Okay, so we lost convergence. Okay, that's one thing where you can get counter moves, but there's just nothing from a 0-date level really altering or changing too much here. And we're just been pinning. Maybe the market's gonna make its move to one of these, crack it towards the more end of a trading session. Inside trading is illegal. CJ, yeah, that's funny actually. Yeah, the daily time frame, right? The daily bar on SPY, right? It got that read of, what did it say? 554, right? That's funny. And then we came down there
note here
yesterday.
For Johnson & Johnson,
it was a
European Commission does approve Balversa for adult patients with unresectable or metastatic urothelial carcinoma. Just of note for ECB, Ren does say disinflation and weak economy support a September cut. Downtrend in inflation is on track.
We'll see if that does anything for NVIDIA. It's kind of like breaking this little uptrend.
That last comment.
Higher lows,
some remarks from ECB,
lower highs.
Does say downtrend in inflation is on track.
If that's the case,
and disinflation
here comes
and
NQ,
weak economy
and here comes S&P 500
cut.
back into those levels. Take a look at coin too. I'm going to take a quick peek into my portfolio again. I just want to make sure everything's all good. Yeah, everything's great. A couple names are really standing out here. A couple names that are down. I don't really care about that. Oh, well, actually, I'll take a look into that one, actually. COR is in my portfolio. I want to see where that's at. I don't like the look of that candle. But it's also nothing really substantially broken. I'm still up on the position. Let me take a look at Spotify. This one also, it's just kind of coming in here. But I'm like flat on these positions, so I don't really care to cut him. Let me see here. I'm just gonna hold there. ALNY is the one that I did have on, and this one's the worst performer for me on the day, but also it's literally nothing's broken. Like nothing's substantially broken by any means here. And the position has been reduced significantly, so it's like I'm not even down anything today. Yeah, I just letting it go, just letting it happen. We'll see what happens, because there's still no real warning signs here for the market. We're just seeing chop. That's all it is. I think that we need to be a little bit more cautious under this 5600 print. I think that that's the main concern here on a larger scale. 56. Okay, so really, if I drew this out, so let's think a little bit, more days. I think that this right now is the level. Where's my rectangle? And remember, gamma flip levels change, but this would be the level that you kind of want to hold. This zone, 56, so about a 40-point range. And I'll show you here, not for the day, but I'm thinking longer here. So 5600 is right here.
Ren does say has always have to be open to what rate decision they do and do not want to commit themselves to what they do at this stage when asked about a 50 basis point cut, and does highlight data dependence.
This is 5550. 5560 is a little bit higher. But the reason why I say that is because there's really nothing below 5600 other than the gamma flip line and a couple points below that. But there's really nothing much going on below it. So to be structurally bullish here, to continue to want to press through and see where traders are reaching up to, the call wall's up here at 5750, and you have a big level at 5700, 5650, right, which is the level of 0 day we were pointing out to today. You want to hold 5600 to be bullish. So if we start breaking down from this, I think that's a little bit of a warning sign to them. Should be a little bit of a warning sign. Now, that it doesn't mean necessarily that that's game end, be over, but you can see that we're right there at 5600, right? We're below it now. And then the gamma flip line's here at that 5650. So through this zone, and we go into negative gamma territory with nothing much beneath us, I don't like the look of that. So that would be probably me saying, yeah, I'm not going to be adding to positions. I'm going to leave, some stuff that I have on that's working. I'll get out of the stuff that's not working fast. And then my portfolio will probably do this and flatline again, which it feels like it's been doing that now for, I don't even know how long. Let me see. I'm at all-time highs actually, right now. Hell yeah. Today, after today, I'm at all-time highs. But this is including the August volatility. Let me make sure I'm not sharing something that I shouldn't be sharing. Yeah. This is two of my portfolios combined, or all my portfolios in my Fidelity stuff, which is my more main swing trading stuff. After today updates, it'll be at all-time highs, but this is August. This little tiny blip here is August. I haven't done anything in August, but then if you look back to the left of the screen, this is basically June. I haven't gone anywhere. So I've ignored a lot of I've seen some hiccups, quickly recovered, just got out of some of those names, and then things leveled out. And I have quite a bit of positions on right now, but they're not like huge positions because I'm trying to see what works right now. I'm literally throwing, I don't know, I'm trying to see what works. I'm looking at good setups, but I'm trying to see what works in this current environment. And right now, I'm seeing some weird names work for me. So be it. And if I can add to them, I will. Like today, my highest performer is up now 9% on the trading session. Like what the heck's going on with that? Let me see, actually. COMP. Like, look at this thing. The heck is this? I have no idea, but I'm in it. It's up 9%. Compass. Actually, I'll probably peel some. Let me see here. me a second. It's breaking out to new highs today. Oh, actually, yeah, I'll probably feel a little bit. Give me a second here. I'm actually going to take off a little bit. I don't need that much of a position right now. It's about a 4% position in my portfolio, so it's not a full-size position, but being this high of a beta, that's still a pretty decent-sized position. So I'm going to cut this down a little bit here. I'm going to sell 17,000 shares. Just kidding.
In 10 minutes' time, Fed Goolsby,
Just kidding.
who is a 2025 voter and previously on the dovish side,
I cut a little bit off.
Speak on CNBC.
Just a little bit.
Goolsby last spoke
Just now to
earlier
see
in the
how it
month, saying
resets
he
up
has
through this
concerns for
area, but I'm
2024.
going to leave a little bit on.
Concerns that the Fed set this
Trade
level
around
of
a core
rates over
position,
a
because
year
if this
ago,
is like
with
something that's
inflation and the labour
moving
market
into a stage 2
cooling faster
markup, I
than
want to catch the
expected.
longer run.
He added he thinks the Fed should take a step
But
back and
for
think
right now,
about
I'm
it.
just trading around
We'll
like a
of course
smaller
pay
core
attention
position.
to how his views have changed since and keep you posted on his remarks.
Compass is in real estate? Okay, thanks. And that makes sense then, because real estate's been seeing a nice bid. My other stronger performer today was Cube. Let's see if that's still doing today. Still working out. Yeah, Cube is looking pretty good. I think that's in real estate too. Well, self-storage. But beautiful, like, kind of cupping pattern here, handled out. Another one, but I didn't trade it because it was very similar, was EXR. And EXR, really nice, you know, broadening pattern here. And boom, we saw a nice big move here, moving up into those levels in the real estate area. So Redfin, RDFN. Let's take a look at Redfin. Redfin's crazy. Look at this thing. Easy McSqueezy. This one just had a really tight consolidation here, a few days, and went boom. I missed that. I wouldn't be entering here, but I'd be looking to see how it consolidates and potentially sets up. But yeah, 18% up on the day. That's big, big money. Big move. Oh, throwing shit at the wall and seeing what sticks. I think that's what you're looking for. That is what I was thinking. I just forgot what the saying was. That's funny. I mean, the ones that I'm throwing at the wall, they're good setups, but it just, I don't know, like, if the industry or the sector is going to be doing all too hot, so yeah. ZM, dude. Kathy Wood sold the position. So funny. All right, we're consolidating here, right here at that high. Let's see. Maybe it sets up again. And then 5,600 is still holding. Market net flow, no convergence. There's a big magnet over here at $52 higher. 560. Or not $2, but $1.20, $1.18, something like that. And we're still holding above a rising 5-day moving average. Is ZM done? Or are we going for another push here on ZM? Let's see if we can get a break. Just had an inside candle. We'll see here if it continues to be inside. You'd want it to break the high of this. If it breaks the low of it, then you'd have to reset up. This is just a minute. I'm just looking at the very kind of micro right here. So it came into this area and saw quite a bit of supply. Probably be better on a larger time frame. I'm just really not interested in trading, to be quite honest, to be quite frank. Good volume on the way up here. A little bit of volume confusion right there. All right, let's take a look here, see if anything else is being mentioned here in chat. Do I believe the market will sell off in September or October? I think we'll have probably some selling, obviously. September is typically the worst month of the year if you date back a long time ago. September's, the month of September, it's green 46% of the time. So it's under 50% of the time. So it's kind of a coin flip of whether it's going to be a positive year or negative year. But it's the worst performing month of the year is September. based off of just historical data. Not me just saying that. I'll show you the historical data. I'll go back into TrendSpider, and I'll show you here seasonality. No, not option, seasonality. Okay, and I'll look at dating back to 1993 on a monthly time frame. It's showing us the months, it's showing us, you know, greater than 0. Well, there's a 58% chance in January, 56 in February. April and November are typically, you know, the higher ones in the 70s, so 70% of the time. In May, 70% of the time, it's a green month. But you can see over here in September, 48%. It's the worst performing month since 1993. So. Does that mean it's going to be a down month? No, but it's just worst month. And then you look at like what the market's been doing as we're coming into the end of August. It's been straight up. So what happens if we come and retrace 50% of this? Does that mean, oh, you know, it's over, it's game over? No, I mean, this is what we talked about in the last video, is just be aware of the shakeouts, because we're approaching the area, right? So the great stall of 2024 was the video here, or whatever. It was like somewhere around here. And the market went up a little bit higher, and everyone's like, well, not everybody, but you know, the trolls, aha, the market's going to all-time highs. And then boom, then all of a sudden they disappear, and then it starts recovering. They're like, ha, 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 see, it's all-time highs again. But really, if you just go back to the left of the screen, it's just been stalled. The market's been stalled from this point. We're seeing a lot of volatility. Now, I'm looking more towards a shakeout. And the only reason why I say that is because there's a lot of signs that we pull back and consolidate, but that's okay. Which led me to make the thumbnail that said, don't be fooled, because even a move down into the month-to-day anchor volume weighted average price, or probably it would be the August month-to-day anchor volume weighted price next month, and the swing low, even if we came down here, people are going to lose their crud. But that doesn't mean that if it starts turning back around, you don't want to be ready for a potential bounce. So that's why we're kind of eyeing in on these levels down here if the market starts to sell. So to revisit this, and for people to understand a little bit how I approach things, or in the market briefs, when we sold off, we were talking about, okay, is it the best time to buy for a swing trader? Probably not. For an investor or for somebody that's, you know, not worried about the volatility, they look at this and they say that's an opportunity. So it depends on how you approach it. For a swing trader, I said, when we get back above a rising 5-day moving average, which is the purple line, right? Rising 5-day moving average. And then also when we go back into positive gamma territory. And we did that, time series, net gamma. We went back into positive gamma territory on August 14th. We were above a rising 5-day moving average prior to that. Okay, and then we looked for a follow-through day. Follow-through day is a day after an attempted rally. So you find the low and then you look for the attempted rally. It's typically day through 4-7 through the work of William J. O'Neill. And the follow-through day is up 1.2% or higher on more volume than the prior day. This was our day to ignore any sort of news headline or anything to start getting exposure back into the markets, to look for good setups and start to add back in, despite all the fear, anxiety, and whatever. And just because this is the follow-through day doesn't mean that this is the low for sure, but no bull market has ever started without seeing a follow-through day. And we went back and that hit in that video. What video was it? If you haven't watched it, that was a low watched video. It sucks for the people that didn't watch it. But I spent time putting that together, and it was one of my lower viewed videos. This is it. How to spot every bull market. Finding stock market bottoms. We did that on 2 weeks ago. When was that? What was the exact date? Give me a second here. August 7th. We did that on this day. So on the day, on the day that we saw this fear, this kind of turnaround, right here on the close, so we did it for the next day, we talked about what to look for specifically. And what to look for specifically came right here. Boink. And then again right here. Boink. Okay. And so far, they haven't been invalidated. The one thing that I will note is this candle's off, by the way. This candle didn't go this low, actually. I'd have to correct that bar. But this day was a distribution day. So this would be a day one of a distribution, meaning that we went down on the day with higher volume to the downside, or higher volume than the day prior. So this is, and it's not like crazy volume, but that would be considered distribution. Now, if we start getting, 4 to 7 days, of distribution days start to pile up on one another, even if we go up higher and then we see another distribution day, and then another distribution day, and then we go up higher and then we see another distribution day, that is more of a warning sign, because you can see that even here, right? We had an outside day, higher, stronger volume. The market went up higher. Guess what? That was a distribution day. That was a distribution day. This was a distribution day. That was a distribution day. This was a distribution day. So do you notice 1, 2, 3, 4, 5, boom, we had 6 distribution days that really gave us some warning shots that, hey, some people might be getting out of the markets. This is only one now, So if they start adding up, we notice to be a little bit more cautious. Does that help? I don't know why I started talking about that. ZM never broke out. Kept on going down, by the way. Thanks, Jalen. Jake, no, I don't stream every day. Mulan, M-U-L-N, 10,000%. What? Or did you trade like an option or something like that? 10%? Oh man, I can't trade these penny stocks. They're too hard for me. SPY is still doing a whole lot of nothing. Did hit new lows just a few minutes ago. Checking on my portfolio, make sure I'm not blowing up. I am not. I'm not blowing up. I'm actually pretty happy with how my portfolio is performing today. Nothing's really too crazy right now. I should have probably trimmed my Google position. Let me look at Google again. It's such a small position, but it's one of the leveraged ones. Oh yeah, there's literally nothing in there. It's not even 1% of my portfolio. Nah, if it cracks down, because I was looking at this as a potential convergence that it broke through, and now it's kind of back testing it with the inside trading day, but I was also keeping an eye on for a potential for a bear flag. And it really hasn't done anything to violate yet. Maybe if it closes below that, that would be the violation, and then I get out and then look for it to reset up if it turns back around. Give me a second here. Okay, I think I'm gonna call it quits there, people. It's just a choppy day. We might get a nice move here towards the end, but I'm not gonna be around for that anyway. I have stuff I gotta go get ready. We're just floating around this 5,600. Kind of makes me want to trade it, to be quite honest, just to trade up. Market net flow has been bullish. There hasn't been any change here in any sort of zero-date structure. Well, now there has. 5,600 seems to be kind of the pin. Not much below it other than now 55.75 is growing. But you can see 56.50 gave way. So maybe traders are giving up a little bit on that, I guess, right now at least. 56.25 is overtook it. 56.25 would be right into the middle of this price action. So if you're comfortable with trading ranges, cool. Maybe go back up into this area, but below 5,600, I just proceed with a little bit more caution after that point. But I'm gonna call it quits there. Thanks for everybody for tuning in. It was quite the stream today. Hope it helped out to an extent, but it was a chop day. So hopefully, if anything, you just kind of found something that was trending and you made an easy trade. Hopefully you traded well or just sat on your hands and watched the price action go. That's exactly what I did. I just didn't see the opportunity here. Don't know what to tell you. Don't know what to tell you. Is what it is. You'll run into that. Thanks, everybody. Mike, Natalie, Mateus, Old Testament, Jason, E, Giancarlo, see man. Thanks everybody. Thanks everybody there on Twitch too. AA, what's up, man? Savage, FT, Tony, XEE, Vibi, Rebecca Black. Not too sure what that means. Oh, unless that's your name. XOO or XOXO from a Savage. Hugs and kisses. Hella funny. See ya, CJ. Captain, see ya. See ya, Jason. Much love. See ya, Matt. All right, everybody, have a good day and have a good weekend. For anybody that's in the Discord, the Patreon that does that, I'm going to be putting out the weekly expected moves, obviously, the new daily expected moves for next week. And then I'm going to go through the watch list, the tight list. And I might just honestly put together the tight list and do a video with the tight list to walk you through some of the thoughts and the setups that I see versus just the document itself.
Who's of course a
just another little thing that I'm thinking here. Add as much value as I can for the group. All right, see you later.